Well, it's been a pretty solid week on the cryptocurrency front. Bitcoin again tipped over the 50k USD mark before dropping back under just slightly. And there's some big news coming from Twitter as well. Let's wrap it up with Matt Harry of DigitalX. Mate, great to see you. Hopefully you've had a wonderful week lockdown in Melbourne, as always. Let's look at the market price action. It's been a pretty interesting week, over 50k. It's pretty solid at the moment. What have you seen?
It has indeed, and good to see you again, Adrian. We have seen, last week we spoke about the emerging daily uptrend on Bitcoin. We also spoke about the recovery in hash rate on the network, and also the fact that we're seeing a fairly large volume of coins flowing off exchange. That has led to higher pricing this week. So we've seen the market hold in really well above that 46k pivot. We poked our head up, Bitcoin poked its head up above $50,000 last night, but we're still looking for kind of more topside into the mid $50,000 range. 56,000 is a reasonable target in our eyes over coming weeks. But look, more interestingly really was Ether this week, where we saw a supply shock send the market sharply higher by around 18% to $3,800 per Ethereum. So pretty impressive. And we fully expect now to see new all-time highs on Ethereum during the end of 2021. So that's over the next couple of months. The other thing that people are really talking about at the moment is the fact that it's a bit of a crypto echo chamber thing. Everyone's saying that September historically is a poor price performance month. If you actually do the work and look back historically, September's no better or worse than any other month. So we're not concerned about this whole Rectember narrative, as they're calling it at the moment. We are fully expecting higher pricing in coming weeks and months.
Yeah, tell us a bit more about Ethereum. It's been fascinating to watch the price move there. For people that don't know, explain what Ethereum is and why there has been a lot of momentum that you've seen over recent times.
Well, look, Ethereum's a smart contract platform, and it's the basis for a lot of the DeFi ecosystem. But the latest move in Ethereum really has been, as I say, as a result of this supply shock. So there's a really well-known on-chain analyst in our industry by the name of Willy Woo, and he introduced this idea of measurable supply shocks in blockchain-based assets like Bitcoin and Ethereum. He breaks the supply down into sort of three key categories. The first being coins on exchange, so very liquid. The second being those held by short-term holders, again, very liquid. And finally, long-term holder supply. So that's illiquid coins held by investors that have very little history of ever selling in the past. So at present, the interplay between those three has led to a huge reduction in Ethereum's supply, or a supply shock. So there's been no sellers, and that's what sent Ethereum really ratcheting higher over the past week. Interestingly, though, we are currently seeing the same or similar on-chain supply dynamics playing out on Bitcoin, which further strengthens our conviction of higher pricing in coming weeks and months.
Yeah, certainly one to watch. Let's have a look at this other story out of Twitter. They were introducing the Bitcoin tipping jar, I believe. And just tell us about who's the founder again of Twitter? What's his name?
So Jack Dorsey.
Jack Dorsey. He's all around this, isn't he?
He is absolutely all around it. It is very well known that Jack Dorsey is a big proponent of Bitcoin and digital currency. So he's the founder of Twitter and Square. Square is currently working towards launching a Bitcoin wallet. They've got a DeFi division, and they also hold Bitcoin on balance sheet as a reserve asset. So now it seems that Jack Dorsey is also bringing Bitcoin functionality to Twitter, as you mentioned, more specifically to Twitter's tip jar. So that's where users can effectively tip each other for the creation of content. Now, philosophically, I'm not so sure that financially incentivizing every man and his dog to create content is a great idea. It can lead to situations like we saw here in Melbourne last week, where sort of 4,000 police horse punching protesters that believe everything they read protested against, among other things, wearing masks during a pandemic. So, but look, whether so it leads to this kind of fake news, and even the fake news crowd
Right.
But whether you're philosophically opposed to financially incentivizing Tom, Dick, and Harry to create content is irrelevant, really. What's happened here is we've seen functionality for Bitcoin activated on one of the largest social media platforms on the planet. So it's just really in line with the trend of continued broad crypto adoption, and very, very good for the industry as a whole.
Yeah, it's a fascinating one. Those sorts of stories are only going to move the price in one direction. You would have thought, but yeah, the what do you call them? The fake news crowd. Goodness me,
That's
I don't.
them. That's them. Unlike yourself, Adrian, news making should be left to educated, smart people like yourself.
And yourself as well, mate. Great insight as always. Have a good weekend. We'll talk really soon. Okay.
You too. Bye for now, Adrian.